Hello, this is Eric Wayne, the business broker. Today I just want to take a minute and talk about recasting. What is recasting? What is the adjusted net of a business? Most business owners don't know what an adjusted net might be when we're trying to sell a business. The tax returns that business owners file may or may not show the actual horsepower or full profits or owner benefits of a business. The tax return shows a profit for the purpose of paying taxes, and then the line by line of the expenses in the business could be broken down further by using a form such as this. Gross sales, we figure what the true business expenses were, and if there were things that were miscategorized, we explain the reason, and then we do what we call the actual. So we would have the numbers that are on the tax returns, possibly, the reason that these numbers may have been personal or miscategorized, and then what the actual numbers are, which is what the business buyers may be interested in, to see what we call the owner benefit over here. So this row might show a smaller profit. This row might show a larger profit. When you're going to sell a business, the buyer puts more value on the sales price if this is a larger number, which is what the owner actually benefited from being the owner. The business will be more valuable if it's showing a larger number. Let me give you an example, an idea. This is an example of what recasting might look like. For multiple years, we have 10, 11, 12, and 13. We have gross sales. The other sales, we consider that cash, so we add that to the gross. Another 20,000 in this year, we add that to the gross. Another 20,000, we add that to the gross. And then we figure some of the expenses. So these are business expenses. And we come down to the bottom, and it says percentages. This is income before taxes for this year, for this year, for this year, for this year. But there were some personal or non-business expenses that were miscategorized intentionally or by accident. So we want to identify what those things were to come up with the recasted earnings for each year. Instead of showing 43 to a buyer, we want to be able to say, but, there were plus 72. Instead of showing 45, we want to be able to explain 90. The business might be twice as valuable to somebody that wants to earn 90 as it is to somebody that only wants to make 45. The sales price will be reflected in what this number shows. So 37 is not as good as 58. 13% profit to the owner is not as good as 20.4. So this is just one example of how to do it. Now this is for multiple years. That gets a little more confusing. Let's stick with something a little more simplistic. Let's stick with 1 year. Gross sales 902. Then we went down to his business expenses, or what was in the actual checking account, for example. But there were adjustments that needed to be made in the amount of 130 that were miscategorized, and they were truly personal. So his expenses got reduced, and therefore he didn't only net 3,600, he actually netted 134.5. This is a much more valuable way of showing what the business earned as opposed to maybe the combined business and personal expenses. Also, if there's any interest on loans, amortization, depreciation, these are all things that we look for as business brokers to bring back and recast, because we assume a buyer is buying for cash when we're calculating. So if you had interest payments, we can move those over and they can become net income or the owner benefit or seller's discretionary earnings. There's different terms that we work with. But the bottom line is we don't want to go to market saying the business made 3,600. We want to be able to show what it really earned to the owner in order to get the right sales price. Here's another example for 17. He actually showed on his tax returns perhaps a loss, and then we do the adjustments of 130 $100,000. And then personal. And what are these personal, right? We can break them down. We'll go over all these with you. But his income, as you can see, was better. And here again, this is a different worksheet. 541 came in. These were business expenses. Doesn't show like a lot of taxable income. But when you do the adjustments, we have the reason to explain to a buyer confidentially. Then we can show the business actually netted the owner 121, much more desirable, and we give some reasons. That's how that works. If there's any questions, please give a call. My name is Eric Wayne, 954-562-2019. We'll be happy to go into any detail you'd like. It's always confidential, and we'll talk to you soon. Thank you.